Investors appear unhappy with Foot Locker's third quarter results here. Shares, they have been hit hard and lower by 9% right now as consumer spending weighed on the company. Here's what the CEO, Mary Dillon, had to say on the company's earnings call.
In the quarter, we saw consumers remain cautious with their discretionary dollars. More specifically, this translated to shoppers concentrating spending around the peak back-to-school selling season in August and then pulling back in September and October, which we believe reflected consumers holding off on spending ahead of holiday events. Looking to the fourth quarter, we expect our customers to remain cautious with their discretionary dollars and to consolidate their spending over peak periods in the holiday season. We also expect the elevated promotional activity we saw in the third quarter to continue through the holiday season.
Here with her takeaways from these results is Christina Fernandez. She's a managing director and senior research analyst at Telsey Advisory Group. Christina, great to have you here with us. I mean, increased promotions that are anticipated to continue to run, and then additionally a consumer that might be a little bit more judicious about what new kicks they want to buy or what they're going to be playing basketball or running in, or perhaps just trying to complete an outfit.
Yeah, no, you're correct. A couple of things, I think, on Foot Locker's report, and the third quarter was weaker than expected, and the fourth quarter is going to be weaker as well. We're seeing the consumer pull back outside of key selling seasons. We've heard that from other retailers as well, but it was more pronounced at Foot Locker. For example, they said August back to school was up high single digit, but then September, October were down low single digits. So that was a factor. Then you're also seeing Nike, which is 60% of their sales, their demand for their products be softer, and that sort of reverberated across the industry. Nike has been offering higher promotions. The retailers have had to respond. So the combination of all those things led to weaker sales, more promotions, and then Foot Locker having to lower their outlook for the year, which is a step back given that they are a turnaround story and have made have several initiatives to improve the business, but now it's a step back here in the back half of 24.
What does that tell you about the consumer right now, Christina?
Yeah, I think the consumer's really picking where they want to spend their money. So, Nike, some of their products are not as much in demand as they were. And then you're seeing them purchase other products. For example, they said sales of Adidas, On, Hoka, New Balance, all those other brands combined were up double digit. But when Nike is your biggest, the bigger player in the industry, then it waits. So it's really a very picky consumer, and they are just buying the things that they, that they want to buy. And if not, they're just passing and moving and purchasing other things. How
critical is Foot Locker right now, especially as you think about the brands that had gone more D2C after decades of their wholesale strategy and their retail partnerships, and then we saw an omni-channel approach, and then we saw trying to pull some of those relationships into their the customers that want to engage with their brands the most, pulling that closer to the vest, and now it seems like we're seeing a little bit of an unwinding there where they're trying to chart new strategies with Foot Locker. What is the timeline for the companies to be able to see benefits from that, for Foot Locker and the Lace Up plan to also see benefits, and for customers as well to really see a difference?
Yeah, I mean, you are seeing some of it. For example, for brands like On and Hoka and New Balance, Foot Locker, and also Dick's, are really important to the ecosystem. In when Nike pulled back from Foot Locker, it really gave these brands an opportunity. It really helps when consumers are shopping at the mall to see the product face to face. So I think that that is working, and Foot Locker is seeing double-digit gains in those brands. So I think it is important. I think as far as like the DTC for the brands, it really varies by brand and more on the momentum. So you are seeing a shift back to wholesale from DTC for all the brands, but then at the same time, different brands are growing at different rates, and there are different phases of their life cycle on the key products.
I walked in the 34th Street Herald Square Foot Locker a couple weeks ago just to look at the new remodeling. And this is something that also got a little bit of a nod in the store-based update portion of Foot Locker's earnings release, talking about the new stores that they've opened, but also the amount of stores that they're closing that seems like it's continuing to outpace the new store openings. Plus, you've got mass remodelings that are taking place as well. What is the reality of the new in-store experience that Foot Locker's trying to drive, making sure that it also passes through to shareholder value and a differing customer experience?
Yeah, I mean, I think it is, they are making changes like what you saw on the 34th Street store, but there's only 6 stores that have that format. So as a percentage of the portfolio, it's still small. The refreshes as well, these are minor refreshers, so better fixtures, just better positioning of the product in the store. And they just started this year, so they're going to do 400 this year, but there's still more to go to 2025, 2026. So I still think it's early days on seeing, the stores being better and having that be a significant driver for Foot Locker on the turnaround. I think where we're seeing more progress, it's really on the brand diversification, and then the other areas of the strategy where we still want to see more improvement is really the omni-channel improvement, and then also loyalty, like the penetration of consumers that are part of the loyalty program, still pretty low compared to what we see from other competitors.
Which brand has the most to gain, and then on the other side, perhaps a brand that has the most to lose if Foot Locker's strategy, that is a multi-year plan that they've laid out to investors, doesn't play out correctly?
I mean, I think if the strategy doesn't play out, I would say, those dollars will go to competitors. For example, Dick's Sporting Goods gaining a lot of share. So it would really be other retailers out there. I feel like all the brands would probably lose from Foot Locker. Obviously, Nike is where they have, it's the biggest partnership. But for all the brands, having less distribution points would be a negative.
Certainly. Christina, thank you so much for taking the time here and giving us some of the key takeaways from the call with Foot Locker. Appreciate it.
You're welcome. Thank you for having me.